Hello and fellow traders, Magic Trader here, and this is the CFTC report for September 3rd, 2019. Here's a snapshot of the positions held as of that date. And so let's start by examining the gold data. And what we can see with gold is we had price hit the supply zone that we've been expecting a drop from, and that's exactly what's starting to take place. But as it was pushing up in there, they added some more longs, which completely makes sense because you'd need to add longs to cause price to move up. So that's what happened. If you take a look at shorts, it still is a little bit on the aggressive side, which could be in preparation for the drop. But I think they're going to be focusing more on taking profits on longs at this point. That's what typically takes place during these scenarios. So taking profits on longs will fuel a move to the downside, and then after they've taken a significant portion of their longs off the table, then they'll start focusing on accumulating a short position. So far everything is looking exactly as we have been expecting. Next we have oil, and we see that price was doing pretty much nothing, consolidating. They took more profits on long positions and they added some short. Besides that, nothing else to see here. Shorts are still cooled off. The only thing that we can really tell by the data, even though it's moving extremely slow, is that they are slowly dropping their long exposure. And you can see that by the net positions as well. Mid 500s down to the high 300s. So really taking their time with this one, but eventually we're going to see a move like this. Okay, so now let's take a look at the US dollar. US dollar longs increased from 48 to 54,000. That's quite a dramatic increase, and that was as price was rallying right up into the tested area of supply. At the same time, they increased their shorts from 18 to 22. That pretty much drops long exposure and increases net positions from 29 to positive 31,000. Now we take a look at the Aussie, and we see with the Aussie, price was consolidating right before the rally, and as that took place, they added longs from 31 to 34,000, and then therefore you got the push to the upside. But they also slightly increased shorts from 92 to 93. Not a big deal. They were at 99. They took profits on those shorts, and then we see them adding just a little bit back, so no big deal there. They are still very much aggressively bearish, and you can see here 73, 74% still up there. So profit taking causing a rally up, and this is exactly what we've been speaking about for the last few weeks. So everything playing out exactly as we expected. Next we have the USDCAD. Price was consolidating at supply, and they increased longs from 37 to 42 and did pretty much nothing with their shorts. So increase, you see price went higher into the weekly supply, so that's the increase on longs, and then price dropped. Why? Because we were hitting supply. That's what price does when it hits supply, it drops. Alright, we go to the next one. We go to the US Swiss franc, and we see that price rallied up into the descending weekly trend line. As that took place, they increased longs from 18 to 22,000. At the same time, they increased shorts 14 to 16,000, thus putting shorts into more aggressive territory. Look at the coloration of the cells here. We used to be bullish and went into more of a neutral bearish territory. So what's going to take place next? We'll have to wait and see. Now we got the Euro US dollar, and Euro US dollar responding to some demand. As that happens, guess what they do? Increase their longs from 173 to 186,000. Are we surprised? No, we're not. We shouldn't be surprised because we were hitting some demand. What happens at demand? Price rallies. Okay, and it's usually caused by either closing of short positions or increasing of longs. And in this case, they increased shorts and they increased longs, so they did both. Now we're in record numbers here, 421 total positions. And let's go over to pound US dollar. Pound US dollar, they needed to take some profits, as we've been talking about since back here. So that's what they did. They started closing their shorts, causing price to rally. We've been expecting that, and this is exactly what's taken place. And now we still have net positions in the high minuses and still bearish. So waiting to see where price will eventually turn down from. Okay, we got the US dollar Japanese yen, and we see price hit demand, start to react to the upside, and we see an increase in longs, 26 to 29. And then we look at shorts, and what do we see here? Aggressive for the first time in a long time. Aggressive. 59, then 57, we're in aggressive territory, and you can see the sentiment here is bearish since the coloration of the cells are red, and we see net positions also in the minus. So expecting more downside at some point. Let it play out to the upside for now, but eventually we're expecting more downside. And the Kiwi dollar, we see the Kiwi hits a demand imbalance here, which is located inside some demand here. And as that took place, we see longs doing nothing and an increase in shorts. So price dropped, increase in shorts. Makes complete sense. Now total size is very aggressive. What do we know happens when it gets into total size being aggressive? Well, they usually take profits. And taking profits here would mean profits on shorts, which will fuel a move to the upside, which is exactly what took place right here. Alright, so once again, looking at the data and looking at the charts, they always make sense. Whatever the institutions do, we can always see it on the charts, especially when they're hitting the institutional supply and demand zones that we've been tracking here at the school. So if you want more information on what we do, you can reach us at www.whiteoakfx.com. Until then, have yourself a good one. Take care.